Welcome back to the channel. It's July. We're here talking about the June 2026 Canmore Market update. We're going to go into all the details as per usual. So let's start off with talking about the different segments in the market, the different areas. So for Canmore, we had 36 sales in June. The average sale price was $1.3 million. The average square foot price was $842 a foot, and it took an average of 45 days to sell.
Banff, we had 2 sales. Average sale price was $1.246 million, $635 a square foot, and 82 days on the market.
Deadman's Flats, we had 30 sales. The average sale price was $720,000, and the average square foot price was $1,044. The average days on the market are not applicable for this because all 30 of those sales were in new construction short-term rental complex. So we don't really like to segue too much onto that, but just to kind of give you guys an idea of what that project's looking at, and that's the Summit in Deadman's Flats.
I will say on that, Parks, 1,044, that number when I saw it was like, oh, okay, Deadman's is finally, it's always followed the Canmore market, but it's always been a little bit less, and it still is less than the average price here. But pre-sales at 1,044 kind of gives you an idea of where the market has shifted, because it wasn't, half a year ago we were talking about, Canmore's finally hit $1,000 price range, and now we're hitting that in Deadman. So
for sure.
Interesting.
Lac-des-Arcs, Harvey Heights, and Exshaw, there was nothing in June, which not necessarily uncommon. Those markets obviously just moved at a little bit of a slower pace. So let's talk about the Canmore market. We're going to break this down in specific detail here, talk about the different property types. So for single-family homes, we have 31 active single-family homes as of today. And sales, we had 7 recorded in June. The average sale price was just shy of $2 million, 1.97 to be exact. The average price per square foot was $676, and those took an average of 59 days to sell.
Townhomes, 38 inventory, 11 sales, 1.1 was the average sale price, $679 a square foot, and 31 days in the market.
Apartments, we have 51 currently active. There were 5 sales in June. The average sale price for those 5 properties was $662,000. The average price per square foot came in at $728, and we saw those move on average in 61 days.
Half duplexes, 8 inventory, 3 sales, 1.8 million was the average sale price. Square foot price average was $772 and 46 days on the market.
Moving into the short-term rental sector here, we have 16 hotel condos on the market. 5 sold in June. Average sale price was $886,000. The average price per square foot was $838 a foot, and those were moving in 42 days on average.
Tourist home, 6 inventory, 5 sales. 1.1 million was the average sale price, $1,217 a square foot, and 34 days in the market.
Yeah. So do we want to talk about this a little bit before we segue into kind of talking about the year-to-date statistics? I'll let you go first. We obviously discussed this, but let's kind of break it down.
Well, I think, if you look at what we talked about, there's 2 sectors there. One pretty glaring one, apartments with 51 active inventory and only 5 sales. The percentage of sales is quite low in comparison to, the rest of the market. And I was just glancing at this when we were going through it, $728 a square foot for an apartment is fairly high. The average sale price is $662, and that's an array of different types of apartments. But for me, 61 days on the market, that kind of drives things up. So I think that's one market where obviously there's been a little bit of a pullback. And so pricing really, really matters on those units.
Yeah, I agree with you on that. Obviously, the half duplex market is very similar as to kind of what we typically see. Single families, what I have noticed is the single family and and the townhouse, the price per square foot has been a little bit lower.
Yeah.
So usually what that tells me is that it's likely units with higher square footage that are being sold.
Yeah.
Sometimes we usually see that closer to $800 a foot, if not sometimes more. Um, so it's just, I think a lot of it is kind of the inventory that we are working with.
Yeah. What's selling, right?
Yeah. I mean, obviously June, July, August tend to be, although there's lots of people who are interested because the town is really busy, it doesn't necessarily mean that it's our busiest months of the year per se.
Especially in residential.
Yeah. And I do
Yeah.
want to touch on maybe why we saw the market. I don't want to say slow as in like we're going the other way or anything like that. There just wasn't a lot of
Hmm.
action. And I think the reason why that is we obviously received a ton of water in the last
Yeah.
30, 45 days.
Yeah.
Um, so again, very difficult for people to sell their homes. Buyers aren't necessarily going and looking at it when it's legit puking rain every single day. Obviously, there was the concerns of the higher water running through the town and whatnot. So I'm
Yeah.
sure people were probably like, let's just wait a sec here. So obviously, that necessarily didn't cause us any issues, and it's now 30 degrees and beautiful out. So I do think that that probably played a little bit of a factor into um, slowing us down for the month.
Yeah. I think based on what happened in 2013 here and, the creeks flooding over and we had a major catastrophe on our hands and all over, especially Western Canada.
Yeah.
There's been a lot of flooding and a lot of rain. And so, you know, people, the media, grantedly, tends to blow things out of proportion a little bit. And,
Hmm.
I was getting texts from people, "Are you guys underwater?" And the river didn't crest and we didn't have any, there was some groundwater issues, which come from being, I mean, if you're in Spring Creek or down in South Canmore, you got two creeks and a river. So, the groundwater can be an issue. There was some creeks that did have some overflow, but the work that was done since 2013 on the major creeks that come up from the mountains here has definitely served its purpose. And while there may have been a little bit of damage to, you know, erosion, creeks, beds and stuff, no damage to the real estate perspective. So
Yeah.
I think that, we should see an uptick here in July,
Yeah.
um, based on weather seems to be getting a little bit nicer and
Yeah.
people are getting out, and that always creates a little bit more excitement and activity
Yeah.
in our market.
Yeah. The other thing I want to talk about too before we move on is just the short-term rental sector a little bit.
Mm,
So obviously there's been a lot of hype around the Timber Peaks project and all of these new short-term rental complexes that are seem to have a lot of people's attention. Um, our inventory levels of 16 in the hotel condo and 6 in the tourist home is quite frankly just like not good enough for most people to buy. And what that causes things to do is it causes the days on the market to increase because not that that product is bad, but if it's priced a little bit too high, it's typically usually our a little bit of a less desirable product compared to what most people are after.
hmm.
Um, now, that being said, when good properties hit the market, it seems like they really get a lot of attention because we're not seeing a lot of them. We don't really have a lot of them on the market at any given time.
Yeah.
So the hotel condo and the tourist home market is still a very strong market. It just it's a little bit slow because people are like, well, there's not really a whole lot of options. And then there's people who are looking at these pre-construction projects, which we talked about this before. I'm a fan of pre-construction just from the standpoint of like you are getting a newer piece of property. But we went and looked at a unit today in Stone Ridge, which is a
Hmm.
complex from 2010. And to be honest with you, I don't understand why people wouldn't want to buy that. Now, obviously, the price is a little bit more money, but in the grand scheme of things, with what you're paying per square foot is very similar. Um, and some of the pre-construction stuff, I just really have a hard time with the square footage. We're
Yeah.
starting to see units with bedrooms that don't have windows. Like,
Yeah. No,
Yeah,
I hear you.
so
It's definitely pre-construction has its place.
for sure.
For those that are, planning 2 years out,
Yeah.
that it makes sense. But if you're looking at getting in the market and um, wanting to create some investment income today, once those properties come on, like the Stone Ridge,
Hmm.
I think those buys are really good. I mean, we were talking today about the pricing on that Stone Ridge, and while it may be a little bit high, I remember, 8, 7 years ago, helping a client buy in Stone Ridge and at 750, and now they're arguably that might be 1.4, 1.5.
Yeah.
Doubled. So I'm not suggesting that if you buy the Stone Ridge, it's going to double in 7 years, because I don't think that's sustainable. But those markets and those buildings. I mean, Stone Ridge is one that we haven't
Yeah.
seen a lot of inventory in.
Well, there's been 3 sales in the last 2 years.
Yeah. So, I mean,
Yeah.
it's a well-built building and
Yeah.
obviously has some great amenities and that kind of thing. So,
And to be honest with you, like I used to really be a fan of the pre-construction because obviously you're buying new, you're basically giving yourself a 10-year shelf life of
mm,
having no issues, and
yeah,
some of the older buildings are obviously getting to be, you know, 15, 16 years old, and they're starting to have some special assessment stuff just to kind of improve the complex and put some betterments into what people have bought into. But the more I've seen it, the the special assessments sometimes aren't always a bad thing. And like
no,
complexes like Stone Ridge and Blackstone and even Solera, like that are a little bit older. Like, I mean, you look at what they've had for expenses, and you look at how this complex is done over the last 15 years,
yeah,
and you compare it to some of the issues that some of these complexes are having in the pre-construction once they're changing hands. I mean,
100%.
we're looking at complexes that aren't even a few years old that are having heating and cooling problems. We're looking at
Hmm.
complexes that are having pool problems. Like, I just now I'm starting to think that, like, hey, if I'm buying in a building that has been really solid and
Yeah,
been ran really well for a long time, yes, it might be older. Now, the inside of your unit and the inside of these buildings, in my opinion, are almost even nicer at some of them. Like Stone Ridge, you walk in and you would never know that that's 2010. It's just
no,
got a really good chalet feel. Um, but I would just almost you're buying into a little bit of a sense of security here. Like a lot of these new construction stuff, you don't know. You have
no,
developers coming from all over who have no idea what they're doing in Canmore. That doesn't mean they don't build a good product or it's not a good investment, but the experience level seems to be going down. And then the experienced builders, now all of a sudden we're seeing some issues with some of them, and it's like, and I
mm-mm.
get that, on new construction. I bought new construction before myself. Like there tends to usually be something, and that's
Yeah,
okay. And
always,
usually they're
always.
pretty good about taking care of it and stuff, but it seems to be happening more often than maybe it did back then. And I
Yeah,
don't know, I'm a fan of some of those older buildings, and some of the new stuff makes a lot of sense too. I mean, Spring Creek, it would be an example of a new product that just
yeah.
continues to come out that is just, it's worth its weight in gold. So
Well, and I think Timber Peaks will be one of those that's probably a good, pre-construction build.
yeah.
The issues have come because typically, we were seeing good square footage,
Hmm.
but now because building costs are so high and land prices are so high, in order for developers to make the numbers work and make it, and I hate the word affordable, because I mean that's a moving target for
Yeah.
everybody, but we're seeing like smaller than usual units
And I
because
hate it.
developers have to, make the numbers work. And
Yeah.
I just, some of the old buildings and track record for me is huge.
Yeah.
Good reserve fund. Yes. You know what? I would suggest, when I'm talking to people, clients, you're going to see a special assessment if you hold the property long enough.
Yeah.
But the idea of that is to there's two types of special assessments in my mind. One where there's an issue, a
Yeah.
major issue,
Yeah.
those ones can be concerning. We had a building in town that, they had a special assessment because of foundational issues. That
Yeah.
is different than a special assessment. Hey, we want to all as owners throw in some money to make our units worth
More
more
money.
money and attractable. So I would say to clients and to the public, you're going to see a special assessment at some point. It's navigating through,
Yeah.
what that looks like. So
Yeah, for sure. Let's talk about a little bit of some year-to-date stuff and some inventory levels and whatnot. So I want to talk about sold listings year-to-date. So in 2025, we had 244 sold listings year-to-date, and in
mhm.
2026, we have 231. So very, very comparable. I think very comparable given the level of inventory that we have as well, because
Yeah,
we have seen more inventory than we have in the last 5 years. Maybe outside of like 2019, 2020, 21. But um, I think the sales are managing to keep up with the inventory, which is good.
yeah, I agree. End of month active inventory 141 and 154. So 141 and 25 and 154 and 26. So the 5 year average is 143. So we're hovering right around that
Yeah.
9% difference. But I would suggest, our inventory is pretty good. There are sectors of the market where the investment properties, the short-term rentals, I think we're low in inventory as we talked about.
Hmm.
But I think overall, we're kind of right where we need to be in that
Yeah,
factor.
I think that the residential market has a lot of choice in it compared to
Yeah,
recent years, which is good. I think that the short-term rental market is limited and
yeah, it's
um
flip-flopped for sure.
yeah.
Yeah.
So let's just touch on the average sale price year to date. So in 2025, we were just over 1.3. And in 2026, we're just over 1.33. We're about $1,000 more for
Hmm.
average sale price year to date. Obviously, if you've been following our videos, you know that we've been kind of playing catch up since the start of the year, just because what had sold in 2025 kind of in the first quarter. There
Yeah.
was some big properties, but we're starting to catch up. So yeah, I think overall, there's nothing really here to further discuss in
No.
the market as a whole. I think we're still balanced. I think buyers still have some control, and I think it's important for sellers to prioritize pricing. Obviously, if you have the Unicorn, Stone Ridge, Spring Creek properties that have the crazy amount of demand where we don't have inventory, and
Hmm.
quite frankly, we don't even really have inventory when you look at it on a 3-year basis. Like,
Yeah.
if you're interested in those buildings, sometimes it's like, you might be waiting a very long time. So, um, I think that those markets are obviously still performing well, and I think the rest of the market is fairly balanced.
Yeah.
I think that overall we're appreciating, and the Canmore market is a good place to be, and I think it'll be interesting to follow July and August just with what has happened in the last 2 months with the amount of rain we had, and obviously we had a lot of snow this winter, and there was a lot going on. So it'll be interesting to see how we perform over the course of the summer.
Yeah. I agree.
Yeah.
I agree. I think excited for July. We've got some nice weather, and hopefully that continues.
Yeah.
Yeah.
Right on. Well, thanks for joining us today. And if you have any questions or you want to see the data yourselves or you want to discuss it and how it affects your specific property, please reach out to us. We're here to help. This is what we do. It's what we enjoy doing. So use us as your resource and stay tuned for July's update next month. And we'll see you guys then.